Hey guys, welcome to the Stop Loss Investor channel. My name is Sai. Today we're going to have a look at Mastercard, a stock analysis, and we're going to go through a few things. Specifically the summary of Mastercard, some reasons to buy Mastercard, reasons to sell, having a look at the company's earnings and revenues, as well as the long-term outlook, and a final wrap-up. So just to give a summary of Mastercard, Mastercard was founded in 1966 and is a leading global payment solution company that provides an array of services in support of credit, debit, mobile, web-based and contactless payments, and other related electronic payment programs to financial institutions and other entities such as governments. So the company's payment solutions include payment programs, marketing, product development, technology, processing, consulting, and information services. It also provides worldwide transaction processing and other payment-related services, which include the facilitating the authorization, clearing, and settlement process of transactions, as well as processing cross-border and currency conversion transactions. So Mastercard manages and licenses payments brands, payment cards brands including Mastercard, Maestro, and Cyrus. The company generates revenues from the fees it charges its customers for transaction processing and other payment-related services. It also earns revenues by charging customers for assessment based on the gross dollar volume of activity on the cards that carry Mastercard brands. Revenues of the companies are based on factors such as cross-border volumes, number of transactions, gross dollar volume, and pricing changes. The company operates a unique and proprietary global payments network that links issuers and acquirers around the globe to facilitate the switching of transactions, permitting account holders to use a Mastercard product at millions of acceptance locations worldwide. Its core network facilitates an efficient and secure means of receiving payments, a convenient payment method for consumers to access their funds, and a channel for businesses to receive insight that is derived from its network. So Mastercard authorizes, clears, and settles transactions through its core network for issuer customers in more than 150 currencies and in more than 210 countries. So we can see, have a look at the multi-layered approach. They have a variety of revenue streams from P to M. Peer to market. So there's consumer credit, debit, pay by account, point of sale financing, and we can also see that there's B2B and government to businesses, which use Mastercard Track and P card and fleet. And we can also see that they have P2P, business to customer, government to customer, which includes Mastercard Send. I think that's consumers, or B2C is business to consumer probably. But anyway, they also have a variety of services that you can see, from cyber intelligence and fraud solutions. They also have data and services where they use data analytics and advisors to advise businesses, as well as processing general payments and other such things as AI. So just to go over some reasons to buy Mastercard. So Mastercard's strategic acquisitions, alliances, and technology upgrades, along with product diversification and geographic expansion initiatives, predict long-term growth. So they have accretive acquisitions. So what do I mean by that? So over the years, Mastercard uses acquisitions to supplement its organic efforts and diversify its revenues. Most of the acquisitions made by the company focused in areas such as data analytics, cyber intelligence, loyalty and costs, and in developing multi-rail solutions for its customers. This has helped Mastercard expand its addressable markets, drive new revenue streams, and strengthen core product solutions. And in 2019, the company acquired several businesses in separate transactions for a total payment of $1.5 billion. So some of the recent acquisitions made by the company include Vise, Nets, Risk Recon, FinCity, among others. During the 6 months ending June 30th, 2020, the company acquired businesses worth $185 million in cash. It expects acquisitions to contribute about 1% to revenues for the ongoing year. So next up is revenues set for long-term growth. So we can see that the organic growth remained a key factor at Mastercard, as evident from its compounded annual growth rate, CAGR, which is at 13% from 2010 to 2019. So it has increased its revenue. Sorry. So it has increased its revenue by 13% each single year for the past 10 years. So compounded annually. And it was, however, down 8.2% in the first 6 months of 2020 due to decline in transactions and volumes due to the effects of border restrictions and social distancing measures. But despite this temporary downslide, I believe the company's revenues are set for long-term growth, given a solid market position and an attractive core business that continues to be driven by new deals, renewed agreements, and expansion of service offerings. So right now, there's just MasterCard and Visa. Like it's either you have either one or the other. The only other type of payments that are available that don't carry these names are American Express and Discovery, and a few other small places. But obviously, there's services such as PayPal and other whatnot. But you would need to use MasterCard to make that solvent, to be able to use MasterCard to put money into PayPal to service that transaction. But realistically, it wouldn't even matter because you have a credit card and you can just use MasterCard to buy stuff. So going into shift to digital payments. So the COVID-19 crisis accelerated the use of electronic forms of payment with much greater adoption of digital and contactless solutions. The digital form of payments is expected to sustain beyond the pandemic. So the key trends include a preference for contactless transactions, rapid adoption of e-commerce, and an increased aversion to cash. So we'll see this going forward by their actual volume trends, which has gone down, but it's pretty interesting to see how it's gone down because they're separated into different sections. But they'll come up in a bit. But to go forward with this, each of the providers, so where was I? So merchant requirements of omnichannel acceptance and a need to automate business-to-business payments. So each of these provide a opportunity for the company's business to expedite the shift to digital forms of payments. So if you guys haven't noticed yet, I'm just reading off a report that I've done which is on my website at stoplossinvestor.com. I've just recently done a Mastercard stock analysis there, and that's basically what we're going through now. And you can have a look at it to read it, and there's a few other charts and other things there that you can have a look at as well. And basically that's titled Mastercard set for long-term growth. So even though there's a current downturn in revenue, they do have a massive growth potential, which is another thing that I'll do in my long-term outlook of the company, which will come at the end. So moving forward into the strong international operations, international markets provide growth and diversification benefits to MasterCard. A major part of the company's revenues is generated from international regions such as the Asia Pacific, Canada, Europe, Latin America, Africa, and the Middle East. Strategic alliances with the governments, banks, and corporations of these regions, along with developed nations of Germany, the UK, Australia, and Japan, bode well for the expansion into e-commerce in the emerging e-money sector. So these markets have the potential to generate growth in the coming years, led by a shift towards card usage and higher consumer spending. The company also received the preliminary approval for its license applications to operate in China, which allowed it to set up a joint venture in the region. China is a vital market for the company and should drive long-term growth. So the company's strong international business led to an increase in cross-border volume growth for the past several years. For 2020, however, cross-border business is expected to remain under pressure due to the COVID-19 related disruption in customer spending. Nevertheless, this downtrend is a temporary blip and the company should be back on track in terms of reaping cross-border revenues once the pandemic subsides. So continuous investment in technology. The company has been making significant progress in its digital strategy and continuously investing in technology. Some of the company's digital innovations are MasterPass, investment in tokenization technology with its MasterCard Digital Enablement Service, which supports contactless payments and digital secure remote payments. So the company also plans to offer token services on all of its cards by 2020, allowing customers to store credentials with merchants without exposing their actual credit card details. So recently, the company rolled out a solution named Mastercard Identity Check globally, which uses data-rich EMV 3D secure authentication standard and applies AI and behavioral biometric capabilities to verify the customer with a single touch or click. So it also launched its secure remote commerce framework, or SRC, in the second half of 2019, which provides a safe, streamlined, and standardized online checkout experience for all the key stakeholders. So the company's continuous investment in technology will keep it ahead of in the dynamic payments industry, and the company has started a click to pay service enabled by new data, AI, and machine learning technology. Next, we have the services business, which is a huge part of its growing revenue streams. Apart from even though recently its core business has subsided, the services business are growing. So the crisis also drove demand for the company's service offerings, including cybersecurity and data analytics. These services offer differentiated solutions that are valued by a variety of customer segments and provide the company with a level of revenue diversification. So when you look at who uses these kind of data analytics or cybersecurity, well, in terms of government payments that they give to customers, also businesses that they give to their employees in terms of wages. So it's important for them to have a level of cybersecurity when making these transactions. So this has become particularly evident amid the COVID environment, as the company services lines grew much faster than its core operations in the second quarter. Next, we have the strong... Oh, go back. There we go. Strong cash generation. So Mastercard has been successfully generating cash flow from operations over the years. Its cash flow generated from operating activities has been increasing since 2019, except in 2014. But the same was up 16.5% year over year in the first 6 months of 2020. This cash flow enables capital management by way of share buyback and dividend payouts. In December 2019, the company increased its quarterly dividend by 21.2% and also authorized a share repurchase program of $8 billion. I believe the company will continue to generate favorable cash from its operations on the back of its growing business volumes. Strong capital position also enables it to pursue acquisitions which have driven inorganic growth. So in terms of bringing in new customers in way of basically taking over companies which already have the customers. So strong solvency position is the next one. So the company's long-term debt as of 30th of June 2020 was $12.5 billion. However, its cash balance of $10.7 billion, along with the $6 billion in credit facility, is enough to service its debt. The company has significant capacity to take on additional debt, given a strong investment grade rating of A1 from Moody's and an A+ from S&P. So those are all the reasons that I could find to buy Mastercard, along with it more or less having a duopoly with Visa. But let's have a look at some of the reasons to sell Mastercard. So we have two here. So high expenses, high rebates, and incentives might drag the company's margins. So that is one thing that I guess I'm concerned about, but not as much, because in terms of its revenues and the rebates and incentives, all of this is made so the company can grow its business. It's not something that's so it's for driving new customers. So it's not a dull expenses or rebates. So, but still, let's have a look at the high expenses. So high expenses, Mastercard continues to face a rise in total expenses. The company is accelerating investments in strategic areas such as safety and security, digital, and B2B products. So you can see that these expenses are coming from its cyber intelligence, data analytics, and trying to grow those services. So the company's also witnessed increased operating costs related to higher revenues, particularly to some of its services such as loyalty. I expect growth in operating expenses driven by investments in digital solutions, safety and security products, data analytics, geographic expansion, and platforms to address new payment flows. The company's continued investments in digital analytics and security products and platforms to address new payment flows will keep operating expenses at elevated levels. But further than that, we have the rebates and incentives. So the company has been incurring quite high levels of costs under rebates and incentives over the past many years in order to gain customers and new business, which makes sense. The same was up 5.7% in the first 6 months of 2020. The company expects rebates and incentives as a percentage of gross revenues to increase sequentially, reflecting increased deal activity in Q3. I believe increasing client incentives will put pressure on the company's net revenues, but I don't see it as a major reason to sell. I just want to make that clear. I was trying to find something to sell Mastercard on, but these reasons are the only ones I could find. But if you have any other reasons or anything else that I should be thinking about or having a look into, please leave that down in the comments below, and I will have a look at that and comment as necessary. But to go from there to the cross-border volume trends, we can see that the areas where the card was present was down by almost 80% or more than 80%, and it has risen quite a bit, about 20% from its March-April lows. But we can see that overall, it's quite overall it was down about 50%. But the main thing is the card not present and the non-travel. So that has actually gone up, and it has slightly decreased as this increased, as people can actually go to a shop rather than and have their card present there. But realistically, they can just not have their card present and still do the same thing. So which is the main thing there. And these trends are growing, which in turn will reduce this, but more or less make this irrelevant as more people use the card not present services. So go and have a look into the earnings and revenues of the company. Mastercard second quarter 2020 earnings has had an earnings of $1.36 per share. However, the bottom line declined 26% year over year. The year over year downside was due to a contraction in gross dollar volume, lower switch transactions, and a weak cross-border business. However, decreased rebates and incentives helped earnings to some extent. So Mastercard's revenues of $3.3 billion fell 17% on a currency-neutral basis. Total adjusted operating expenses declined 5% to $1.6 billion, owing to a dip in advertising and marketing, travel, and professional fee spend. Adjusted operating margin of 51.8% was down 600 basis points year over year. Gross dollar volume was down 10% to $1.4 trillion, while cross-border volumes plunged to 45% on a local currency basis, which is very much understandable as there's low travel, low transactions going across the border, as well as just general transaction volumes going down with everything being shut down. And this also has transferred over into the switch transaction and card space, where you can see that it had a 10% or negative 10% growth. And so basically the switch transactions indicate a number of times the company's products were used to facilitate transactions. But the card's growth was up 5%, which is weird. But I think, that was up 5%, while the actual transactions were down 10%. So to go forward from there, we have the long-term outlook of the company. We have three different pictures here. So we can see that the core network has a few things there: the acquirer, the merchant, the account holder, the issuer, and all of them are serviced by Mastercard. We have the value-added products such as loyalty and rewards, analytics and insights, consulting, processing, obviously, and the cyber and intelligence side of things. So Mastercard is still in its growth phase, as the company's penetrated only 2.5% of the total addressable market of $235 trillion. So where am I getting that? So here you can see that it's 5.9%. So that's a gross dollar volume. So that's only taking into account its payment flows, revenue from the payment flows that it generates. And this is the actual payment flows of the market. So we can see that 68% of this is actually cash and check. So that's not even facilitated by MasterCard or Visa or anyone really. It's basically by the government, I guess, because they issue the currency. But yeah, so that's $68 trillion. That's not being serviced by MasterCard or Visa or any service provider really. And only 30% is carded. So they have a big area there. And right now, if we look at MasterCard and Visa is currently doing double of MasterCard. And I will actually do a video next week on a Visa analysis and look at the growth story there, or the stock analysis of the company. And yeah, but you can see it's only doing 5.9%, and it has grown quite exponentially, nearly doubled. Sorry, it's about it's 50% higher from as 2012 to 2018, and this is only going to grow as more people get onto the internet, get onto the not to the internet, but get onto the digital side of things as the coronavirus induced transformation is beginning. So that's the long-term outlook of the company, and that is just based on the fact that their payment flows. That's not even taking into account their analytics and insights and their cyber intelligence, as well as the rewards that they're adding. And obviously these loyalty rewards will add to their operating expenses, which is the reasons why those were on the sell side of things, because as these grow, as this $5.9 trillion grows further into this pie, they will have to use more of this to get that to make that happen. But they can use their analytics and insights and consulting to help the consumers or the government, or even the everyday people have an insight into their purchasing power, and then maybe even do a consulting service with customers to be able to see how they can better manage their finances, and as well as the cyber and intelligence side of things when it comes to businesses and businesses paying their employees, or governments giving citizens payments as well. So there are many things that MasterCard can do. There's many ways that they can go from here. I believe this is just the start of their services, and most of this, and they're in the beginning phase of their actual core products as well. As we can see that they only have penetrated $5.9 trillion of the $235 trillion market. And this adds to this total addressable market further. And they can obviously go into many different directions to generate revenues. So from there, I want to just go into the summary of MasterCard. So just to give an outlook of how the shares have performed. They have outperformed this industry by a lot. They have outperformed Visa by a lot. The company has undertaken several acquisitions to supplement organic efforts and diversify revenue over the years, which has helped expand its addressable markets and strengthen core product solutions. It is gaining from transitions in payments from physical to digital. Investment in technology keeps it at the forefront of the rapidly evolving payments industry. It is also it's also witnessing buoyant demand for its data analytics, cyber solutions, and its solid capital position enables investment in the business. So the second quarter earnings beat estimates and decreased revenue rebates and incentives. However, its escalating costs might put pressure on the company's margins. It also cancelled its annual 2020 outlook for the net revenues and operating expenses due to the coronavirus-induced business loss. So yeah, with that being said, that is the end of the video, and I just want to thank everyone for listening and watching, and I hope you gained some insight from this. And leave your thoughts and comments in the comment section below, and let me know what you think of MasterCard. I want to know if there's anything I missed, if there's any thing exciting that they're doing, if there's any reasons to sell the company. I believe it's a fantastic company to hold for the long term. It has very much a high growth story. That sentence didn't even make sense, but it's very much a high growth story. It has very high potential to take over Visa, and I believe it can totally do that in the going forward into the future. But yeah, leave your thoughts in the comments below, and I just want to thank you guys again for watching, and I hope you guys have a great day. Take care, everyone.